Let's go. Oh my God. What is up, everybody? Welcome to Trey's Trades. We have technical analysis in different stocks in the stock market, as well as potential buy, hold, or sell opinions on these given stocks. Like I preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. So today, my friends, my family, my fellow Gorilla Gang, we're going to be going over ticker symbol AMC again, obviously here today. Let me take a quick sip of my Diet Coke from Subway. For anybody curious, I didn't get a meatball pepperoni today. I actually got a spicy Italian on flatbread. Pretty freaking decent sandwich. But I want to go over the overall technicals on the stock, give you my thoughts on what the heck is going down right now. And then I want to cover the Ortex data, the short sale volume ratio data, and my thoughts on what we can expect here down the road. I want to preface this by saying that I did purchase some call options today, okay? I picked up some ones that are risky, so I want you to know they're risky. If you're not familiar with options, know there's risk involved with options, right? We actually talked about this pretty specifically, and I'm going to go over all the indicators and the technical analysis here in a second, but we have a very, very good potential of a repeat trend playing out here on the charts. I thought that we would see a bounce off of about $9.16. It ended up dipping a little bit below that. It's touched about $9 or so. But I say this because we see this exact same trend playing out from where we saw back here between early February and late February. I kind of came up with this conclusion, right? So history repeats itself. I don't think that any trend or any correlation is by accident. I think that most of the time, 99.9% of the time, it is because history repeats itself, right? And we saw this triple top setup 1, 2, 3 times that it tried breaking this resistance line at about 657, couldn't get it, and they would bounce back down about 526 until the fourth time it was successful and led us to about a 10-day process in which we hit about $14, right? So with that being said, I see this exact same trend playing out. I mean, there's a little bit of a difference, right? We see that it broke this actual support line here momentarily for a short little while, and it very well could do that again, right? We don't know exactly what's going to happen, but I saw the same trend playing out. 1 top, 2 top, 3 tops, and it's testing this a fourth time. And if this trend plays out the exact same way that it did the previous time, right, we can expect that it will test out $11.20. This isn't going to happen overnight, right? This is not something you're going to wake up tomorrow and all of a sudden you're going to see $11. But I do think that it's very possible we see $11.20 within the next 1, 2, 3 days or so. There's a lot of good things coming on the horizon. I'm actually going to make a very short video, like a 4 or 5 minute video after this to post. And it's going to be talking about the expected EPS, earnings per share. And I want to talk about the vote getting pushed down to the right. But I'm going to keep this purely based on the technicals, on the data, and we can talk about that. So, based on the technical analysis, there's 3 things that I look at in terms of indicators. I use overall volume, and I look at candles and trends. That's literally it, right? I keep it bare bones simple because I think this is 95% of what you need to understand the psychology of what's going on in charts, right? So we see that we have this trend playing out 1, 2, 3 times. It bounced between this trading channel between 11.20 and 9.16, and this fourth time, it looks like it may very well get a bounce yet. This is not a definitive bounce, right? We need to break this descending level of resistance for confirmation that we are back in bullish territory, back into setting an upward trend line, but it's the first step, right? So what are we looking for next in order to signify that this is back on track, back into an upward moving channel? You want a 1 hour candle that opens and closes above this descending level of resistance. What is that going to look like, right? So let's just say tomorrow at market open, all of a sudden you see a candle that moves from 946 all the way up to 975. Opens and closes above that, and you either consolidate or you form a slight upward trend. That is picture perfect. That to me is going to indicate that we have gotten that significant bounce off of the 916 level of support, and we are back in a good bullish territory. We haven't had a good day of consolidation yet. Consolidation is always getting ready for the next leg up. Here's an example, right? So we saw a nice push from this level of support at 914 up to 979, consolidated for a little while, ran up again, and then consolidated for a straight day, right? Forming this big George W setup right here. And this is a picture perfect setup for consolidation getting ready for the next leg up. So ideally what you're looking for is this, right? Maybe tomorrow we get a nice green day. Maybe it'll be a George W setup, right? Maybe we'll bounce off of 916 again, and then we'll get that significant bounce up over this descending level of resistance, which is going to bring us into the next leg up. But overall, right, what you're looking for is this stair-stepping. Period where it moves, little period of consolidation, period where it moves, little period of consolidation, right? Following the slow trend line up where we can get a nice bounce back to about $11.20. We've crossed box 1, right? Box 1 is we get the beginning of the bounce off of $9.16. Now we need to get that bounce back up to $11.20, which is why I picked up some of those $9.5 strike AMC calls. They expire next Friday. So I picked up about $1,000 worth, not because, I'm trying to gamble or anything like that, obviously. I think it's because of this significant trend, right? We've seen this play out time and time and time and time again. This is an opportunity in my eyes, but like I said, there's risk involved with options. If you're not familiar with options, know they are risky. Don't bet anything you're not willing to lose, right? That's very significant, important to say. But nonetheless, we're seeing this trend over and over and over and over, and it's an opportunity to make a little bit of money on the way up, and you can reinvest that back into stock if you'd like to do so. That has been my plan, and anytime that I've been profitable on call options on AMC, that is what I have personally done. I also have some June 18th $13 strike calls. Now, they're not very deep out the money for a specific reason. That's because there is a large amount of risk associated with having calls that are very, 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 very deep out the money. Because if you're wrong, you lose all of that. There's no intrinsic value in an out the money stock, right? If you want to buy in the money stock, or options, I should say, there's more intrinsic value that's held onto that option. It's just not going to be as profitable, right? You make more money on more risk. That's essentially what it is. But that's why I picked up some $9.5 strike calls today. They are expiring next Friday. Know that there's risk involved. We're just going to keep moving forward. So this is what you're looking for. This is what I'm anticipating is going to happen. We got the beginning of the bounce off of 918. Watch for a 1 hour candle that opens and closes above this descending level of resistance. And then watch for that slow stair stepping up, right? It's going to look something like this. Stair step, consolidation, stair step, consolidation, stair step, consolidation, stair step, stair step, stair step. It's about 12.22, right? You're looking for something like that. And we can look back actually to the $14 run up, and you can see very, very similar price action outside of this little asterisk right here, right? So what do we have? Stair step consolidates, stair step consolidate, stair step consolidate, stair step consolidate, right? That's what you're looking for. So look for that sort of setup, and you're going to know that we're going in the right direction. The more explosive the growth, the more likely you are to see an equally explosive implosion. So that's what you're looking at on the charts right now, and that's what I think is important. We've got the 15 MA that is hooked underneath the 200 EMA. That was a couple days ago, right? I warned this is a little bit of a bearish indicator. That's why I thought that we'd see this bounce down at about $9.18. And you're looking for that 15 MA, which is the short-term microscopic price action lagging trend line, to start hooking back in towards this purple trend line, which is the 200 EMA, the exponential moving average. If you get that, that is going to be a sign that we are back in good bullish territory. It's a lagging trend line, right? So it doesn't indicate that something's going to happen. It shows you previous price action. But if you can look at previous price action and see things that it correlates with, right, you can take a good stab at what's about to happen. For instance, here, right, 15 MA levels out, starts hooking up. You can anticipate that you could see a nice push back up to that 200 EMA. So watch for something like that. That's what I'm watching for as well. Volume is still nice and decently consistent. It's still low, right? It's not enough volume to get a good squeeze, which is why I said I just don't think it's here yet. We're waiting on, it could take a couple weeks. It could take a month. It could take 2 months. There's a lot of catalysts coming up forward that could push this sooner, right? But this is if we lived in a vacuum. If we lived in a vacuum, I just don't think we're there yet. We're getting in the right direction, right? We're stair stepping. Once we get that break over 1120, and then we get that break over $14, which could take a couple weeks, right? We're cooking with Crisco. So watch for that, my friends. That's what you're looking at right there. Next, I want to show you Ortex. I just want to go over the overall numbers that we're looking at. And the short interest has actually went up again today. So that is good to see. We got 0.92% short interest change, which is almost a percent gain. We're back almost to about 23% current short interest percentage of free float. The free float are the shares that are available to everybody after institutions and insiders have gotten their cut of the pie. Utilization back at a hundo, baby, which is absolutely beautiful. Cost to borrow is about consolidated or so. Days to cover going up. Days to cover is the short interest divided by the 3-month average volume. And you can see that the 2-week actually is a lot higher than the 3-month. And that's because the volume is a lot different in the last 2 weeks than it has been over the last 3 months. Take that bottom denominator, right? And you're going to see that the actual number is changing. Shares on loan also went up today. Free float on loan went up today. Short interest went up today. So we are trending back in the right direction. You can see this is validated by the fact that the actual short volume percentage has overall been trending upwards in the last week or so, right? Now we had a little bit of a down day on the 3rd. We haven't seen the 4th yet. I'm anticipating it's going to be pretty decently high, but we're starting a little bit of a new ascending level, right? So if you're 37% is a low here, 41% is a low here, I would not be surprised if today when this information is released is a little bit higher, maybe somewhere in the 45 to 50% range or so. That's about what I'd be looking for to see that we are still being pretty heavily shorted. Nonetheless, 41%, absurd. Can you imagine shorting AMC? Wouldn't be me. Makes no sense at all. Makes no sense at all. But that's what we kind of got rocking here today. So, I've seen a lot of people talking about that bounce off of 915. I think it is going to come to fruition, but we haven't got that confirmation yet. So don't get too excited, right? We're not quite out of the clear of this bottom level. We're looking for something like this, right? Stair step up, consolidate. Stair step up, consolidate. You want a clear, hard bounce in engulfing candlestick pattern. That to me is going to say that we are good and cooking with Crisco, and we are about to begin the next ascending level of support and the next upward moving channel. And that is what I've got for this video here today. So I'm going to be making another one talking about the expected earnings per share as well as that shareholder vote getting moved down. So you guys can look for that down the road. I don't know why I'm playing with this cap. I've got a little bit of a fixation thing. I always like to fidget. I've got too much energy, but nonetheless, that's what I've got for you guys today. So if you enjoyed the video, blah, 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 consider subscribing, like the video, you know the whole spiel. That's what I've got for you guys. So thank you for watching, my friends, my family, my fellow Gorilla Gang. Much love. Catch you later, and peace.